Did you know that the difference between good credit and damaged credit can potentially cost you thousands of dollars in interest? A lot of people think bad credit only matters when you're denied, but getting approved can be expensive too. I know because I've experienced it myself. I could still get approved for certain things, but the terms weren't always in my favor. The interest rate was higher, the payment was higher, and I was paying more simply because the lender considered me a greater risk. That's when I started looking at credit differently. Your credit score isn't just a number, it can affect how much of your paycheck you get to keep. Think about two people buying the exact same vehicle, same car, same price, same down payment. One person qualifies for a competitive interest rate, the other person gets approved at a much higher rate because of their credit profile. They both drive away in the same vehicle, but they can have completely different monthly payments and total costs. Over 5 or 6 years, that difference can add up to thousands of dollars, and it doesn't stop with cars. The same thing can happen with mortgages, credit cards, and personal loans. That's why waiting to work on your credit can become expensive. So if you're tired of paying high interest rates, here are 3 steps I would focus on. Step 1. Find out what's actually affecting your credit. Don't just look at the score, pull all 3 credit reports and review them carefully. Look at your payment history, credit card balances, collections, charge-offs, inquiries, account status, dates, and anything else that may be affecting how lenders see you. Look for information that appears inaccurate, incomplete, or doesn't belong to you. You can't build the right strategy until you understand the problem. Step 2. Work on the things you can control right now. If your credit cards are carrying high balances, create a plan to reduce your utilization. If you're missing payments, getting current and staying current needs to become a priority. If you're constantly applying for new credit, slow down and make sure every application has a purpose. And if you identify information on your reports that you believe is inaccurate or incomplete, learn what your dispute rights are and address it properly. Credit improvement is usually several small decisions working together. Step 3. Stop waiting until you need financing. This is probably the biggest lesson I learned. Most people start worrying about their credit when they're sitting at the dealership or talking to a mortgage lender. That's too late to start preparing. Your goal should be to work on your credit before you need it. If you know you want to buy a vehicle next year, start now. If home ownership is one of your goals, start now. If you eventually want better credit card offers or the ability to refinance existing debt, start now. Give yourself time to make changes instead of trying to fix everything under pressure. A higher credit score doesn't automatically guarantee approval or a particular interest rate. Lenders consider multiple factors, including income, debt, the type of loan, and their own underwriting requirements. But stronger credit can put you in a better position to compete for better financing terms. I don't want you celebrating just because somebody said yes. I want you asking, what is this approval actually costing me? Look at the interest rate, monthly payment, length of the loan, and most importantly, the total amount you'll pay by the time it's finished. Sometimes the difference between an affordable loan and an expensive one isn't the thing you're buying, it's the financing. Better credit isn't about bragging about a number, it's about having options. It's about walking into a dealership with more negotiating power. It's about applying for a mortgage knowing you've prepared. It's about keeping more of your money instead of sending it away in unnecessary interest. If you're paying high interest rates right now, don't beat yourself up about decisions you've already made. Use that frustration as motivation to change what happens next. Start by understanding your reports, work on the factors you can control, and prepare your credit before your next major purchase. If you don't know where to start, comment credit below. I'll send you information that can help you take the first step toward understanding what's affecting your credit and building a strategy for your situation. And if this video gave you something useful, please give it a like and subscribe to the channel. Take a few minutes to go through some of my other videos too. The more you watch, like, comment, and engage with this content, the more it helps the algorithm put this information in front of other people who may need it. Don't wait until your next approval to find out what your credit is costing you. Start working on it today.